Good evening, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this is for Tuesday, the 19th of October, 2021. I want to remind you that tomorrow we have our live webinar. It starts, I actually opened the doors to it at 12:15 p.m. Central Time. It starts at 12:30 p.m. It ends promptly 20 minutes later, 12:50. I do not post it on the website. If you attend and you've got questions, register, send me your questions now. Give me the opportunity to build the charts, be it on stocks, ETFs, or SPDRs. I have all the futures ones ready to go. If you didn't get an invite, it means you're not in my system. You take your cursor and any point during this video, move it up and click it up on the top here. You're going to see an icon appear. Click on that icon. That's your invite. Fill out the form and away you go. You'll get an email from us after that. Fair enough? Okay. It's a day of politics today. It's the 19th of October. 13 Democrats are saying they don't want to run for office now for the midterms. That puts the weight of the House of Representatives seriously in question. Often, history shows that I think since 1900 or so, only 2 times at midterms has a sitting president's party won more seats in the House. So that doesn't bode well for it. I love these statistics that you hear all the time. What else? Well, today we saw that the IRS and Logic won out. The banks don't want to send, as the Democrats were trying to do, every transaction requiring a bank of $600 or more, income coming in, or money going out of your account to the IRS where they have to store it, God knows where. I mean, I know what the clouds are, but you realize the cost of all that. And for what? Are we really after that's the person we're going after with the IRS? This is why they want to hire 40,000 IRS agents? Are we nuts? Let's go after where it belongs. It's the bigger transaction deals. It's those that somehow you flag what the bigger numbers are. This was craziness, but Logic played its role. We saw today that the president did have both parties in to be with him separately. The progressives of the Democratic Party, and then of the Democratic Party, the moderates. He didn't bring them in together. And they probably wouldn't agree on anything together. The simple fact is the progressives are out, gone. Now it's a question of just having them not stop the other plans that'll go through. I know you won't agree with me on it, but that's pretty much what I'm seeing. This banking thing smelled of Elizabeth Warren all over it, and I have a feeling that was it. Okay, so now we move into the market, and what does it mean? Well, it is important. What about Bitcoin today? So your pro shares debuted, and what do you have, 20 some odd million shares or more? I stopped counting at 20 million, and that was about noon. So I don't know where it ended up, but that's one phenomenal debut for this product. And remember, let me not use that word. The investment community doesn't like that it's futures-based. They wanted it based by a physical. The problem for them is there is no such thing as a physical. It's not silver. It's not copper. It's not a T-bond you're going to hold. It's a crypto. Nobody wants to give you that crypto. They all want to hide it. I don't know how you do that, but it's a beginning and it's a win day for those in the crypto industry. So applaud it because it's there. This was a big win for them. Now in the marketplace, overall, I think the stock market's a little bit ahead of itself. Now, you don't want to hear that. I think bonds and notes have turned the corner. They're back to the bearish camp. Metals are bullish, but the correction phase is happening slowly right here. That's what I'm seeing. So let's take a look. Microsoft, new highs for the whole move. So this is a market that just put on nearly $30 an ounce. Congratulations. Not an ounce, $30 a share. Still caught in the metals. With the swing lines, you have a lower low. And look at this vertical rally. This has taken off from 292.35 every single day, 5 days in a row, a higher high, adding on gains, and that's one heck of a move. That's what I call a vertical price move. They're hard to catch, especially if you're not already coming in with the higher highs, higher lows, but you observe them. Is there any reason to be short? None. Has the market been under the 18-day average of closes to be short? No. It's been over it since back here at the very beginning of the month. So where might the market have some problems? Well, if the 18-day average is here, the 100 and the 200 here, then it's got to be the upper Bollinger Band. And that number's right there, and you're hitting it right now. So this is where I expect the resistance to finally show itself. Resistance doesn't mean going short. You look at resistance and you combine it with momentum, you have an overbought market that is not yet embedded up here. I think the pros are saying, so long, made my money, I'm going to look elsewhere for a little bit. Same thing in Apple, but not with the vertical price rise. This yesterday set itself up with an outside day up, and as we talked, if the market had any momentum, the upper Bollinger Band next target, and that's where you went, you didn't run very far from it. So I feel good about that. It's also overbought. This was the end of this decline. That's what I think for a long time. I don't see Apple dropping at Christmas time, and you got to start thinking Christmas sales, people buying the i7, the phones if they can get them, whatever products. That's what I think. And they're doing pretty good with their streaming business. In ARK, what would you do here? Okay, Kathy, I think this is where the pros are going to take money off the table. This is yesterday. The combination right here in an overbought market of the 100-day average in the upper Bollinger Band in an uptrend that began back here and is carried on. I think we're going to look back and say to ourselves, yep, it seems to have peaked right through there. That's not bearish. I'm not telling you to go short. You're not hearing that. I think there's points where you take money off the table. How much? I teach in my enhanced Bollinger Band course. When you look here at the slow stochastic, again, not embedded. You hit the band in the 100-day, fell back, coming to it. That's distribution, but I'm not convinced it's got power to the upside. But don't get me wrong. Put a gun to this head. Am I bullish or bearish on this? I'm bullish. You got to take out 101.90 to get me neutral. I'm bullish. It's overbought and in key resistance. Semiconductors, what do you think? Duh. Where's the upper Bollinger Band? Oh boy. 208.90, overbought. Why not just finish it off, go there, and make guys like me real happy? Because that would be the first leg of the profit objective. I'm wildly bullish on these. Why? When I hear a company's got 2-year backlog for semiconductors, and there's nobody to compete with these companies, there's not a lot of new plants coming on, how could you be bearish? That's what I'm looking at. That's the fundamental part. I'm a chartist. Believe me, that's how I look at it as a chartist, bullish. CNBC, game could be over on THCX. It rallied, had a big outside day. I prepped traders this morning saying, got to be very careful here. This market could take that out and you'd be going back to neutral. I question if this isn't about to do the same. With the market here, and I'll show you why I'm coming to this, you had a downtrend, just missed the lower band. What happened today on the slow stochastic? Let me walk you through this my way. Both numbers under 20, under 20, under 20. So that's through Wednesday of last week, right? That is where you're at, still under 20. What do you do the first time on a move like this if you get a reading over 21 that I say to do? It doesn't mean I'm right on it. It's my own thinking. That's where it starts and stops. If you get the reading over 21, I tell my traders out of all shorts, right at the end of the day. If it re-embeds for the 1 or 2 times it happens, I wouldn't worry about it. This is where you take money out and you're gone. Could this bear leg be over? It could be. Is it yet? I haven't been proven right. I don't know what tomorrow's going to hold, but I think you're going to lose that reading and get up to that 18-day average at a minimum and break the pattern of lower highs, lower lows. And XHB, I'm lost with why this market's staying up. I looked at the U.S. housing starts and permits today. They were disastrous. They were in the neighborhood of 5 times worse than the low estimates that were calling for pullbacks. And yet the market's hanging there? Nah, Let somebody else own it. I did a piece today for TikTok on Bloomberg. They asked me about housing, and I explained you have rental wars. Are you reading about those in New York? We have them in Chicago in some areas, where you call up, look at something. Well, I've got another person that wants that apartment, and there's a rental war, just like a bidding war for a house, and they're paying more rent. They're willing to do that. This move out of the big cities, when the cities come alive again, the flock comes back. There's nothing like what big cities offer. And I know there's that element of crime and dirt, and I'm agreeing with you. But it's also got the other parts, the life, the verve that it has. And that's what you're seeing in them, especially if COVID's better under control. Fingers crossed, the different agencies, CDC, FDA, are going to approve the second shot, especially one for the children, and that will get another element done. And I do realize we all have problems with the police, the fire people that don't want this, and cities are mandating that you won't have a job, a paying job now. In Chicago, that's what's going on right now if you don't prove that you're vaccinated. You have your right not to do it. The city's saying it has the right not to pay you anymore, and they don't want you on the job. That's pretty important. I mean, I understand putting something in your arm you don't want. I fully get it. XLE, fully embedded, right? I'm still bullish. Why wouldn't I be? So I don't see anything on the energy sector to scare me off at this point. The emerging markets, I think they're watching everything around them and they're going, my turn, you're going to be turning to me because you're already moving and there's nowhere else to go. That's what I think is happening, and I think the market coming up a little bit like that. Then we get to the gold market that it just doesn't want to reward the gold traders. It had a chance today to be good, and it settles back and gives that all up. Momentum is down, the trend is up, the bias is up. You need the three pieces to come together. I think that's what it's waiting for. However, the gold miners are viewing it differently. They're about to embed. If they embed with the numbers, here's today, both numbers over 80 the day before, and the day before on Friday, game over. Until the red line closes back under 80, I think they'll probe the long side. So this market's ahead of the base price of the metal. Interesting. COPEX, copper. 4 days in a row over the upper Bollinger Band. You go to your casino, you look for the odds because everybody's bullish. It's just going to keep going. You want to take the other side of that bet for an 8-hour period, a 10-hour period, because typically in futures you don't get more than 5. That's not a bear sign, but you're no longer excessive, and you've got your embedded reading and all. I think the pros are waiting. Now, there's something else that could happen here. You're liable to get very soon. It could be end of next week, where the 18-day average of closes gets over both the 100 and the 200, another bullish element on the chart. So be ready for that crossover. That could be there. TLT ran into its mate at the 100-day average. When it's got under it, it hasn't been able to get back over it. Do you agree with that? And it's now underneath other averages. This chart's getting worse and worse on the bear side, which means higher rates likely to be coming. But it hasn't set up a classic downtrend with the lower highs, lower lows, and all that. In euro, I'll end right here. Lower low, higher high. I thought you'd get back there when you lost the embedded reading. Let me teach you again. You lose that. Momentum leads price most of the time. Not always, but most of the time, the way that I teach charting. I know for every time I say that it does that, there's a group out there that says, no, it doesn't. I give you all the credence in the world. So I'll say the way that I teach, and that you can't argue with. So I was looking for the 18-week, and that's what you hit. Now it's a question of what next, and I'll wait and see, and we'll talk about that maybe when you attend the live What's Up chat room with me. Now to get there, it's so simple. All you do is you click on right here, and there'll be an icon when you do that, all right? Fill out the form. But do me a favor and yourself a favor. If you want me to cover a lot of stocks, write them to me. Give me an opportunity tomorrow morning to prepare them all so that when you're in the chat room with me, I can wrap them off. Boom, boom, boom. I don't care if I do 50 charts in one of these, but you got to give me an opportunity. If you're going to ask me the question when you just get in and think I can create that chart, I don't have the crowd, the expertise of the crowd that a Jim Cramer and other people that they have, all those people behind him. Jim doesn't just sit there and hit a button and that chart comes up with everything he wants. He's got help. Is he a genius of knowing what these charts are all about and that? I'll let you decide that. I think he's there. So, I just think I know what it takes to do what I do. At his scale, it's another scale. I'm Ira Epstein. You have a great day. I will see you all tomorrow.